So, yeah, yesterday was one of those days where risk just quietly walked out of the room. Hey everyone, it's Friday morning, February 13th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. U.S. stocks sold off hard as investors rotated out of technology shares, driven by growing concerns about artificial intelligence disruption. At the same time, markets were already feeling cautious ahead of today's inflation report, especially after a very strong January jobs number cooled expectations for rate cuts. The Dow Jones Industrial Average dropped roughly 1.3%, losing more than 650 points, snapping a 3-day winning streak. The Standard & Poor's 500 fell 1.6%, while the Nasdaq Composite slid more than 2%, with tech clearly leading the decline. Risk-off was the theme across asset classes. Gold futures sank about 3%, and Bitcoin slipped to around $65,000 as investors pulled back from riskier trades. A big part of the pressure came from growing anxiety around which sectors could be most exposed to artificial intelligence disruption. Software stocks were hit first, but yesterday trucking and logistics companies, along with real estate services firms, also came under heavy pressure. On the company side, Cisco Systems dropped more than 12% after issuing a weak profit outlook, even though sales actually improved on the back of big tech's AI spending. Nvidia also moved lower, while Meta, Amazon, and Apple all saw sharp losses, with Apple down roughly 5%. Looking ahead, all eyes now turn to today's Consumer Price Index report. A softer inflation number could revive hopes that price pressures are easing without derailing economic growth. Still, strong hiring remains a challenge for the Federal Reserve. Weekly jobless claims declined less than expected, and earlier data showed the U.S. economy added roughly twice as many jobs as forecast in January. That combination of resilient labor markets and sticky inflation makes near-term rate cuts less likely. Elsewhere, McDonald's shares edged higher after beating earnings expectations, while results from Coinbase, Applied Materials, and Rivian were released later yesterday after the market close. All right. That wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.